Hello traders, Gary Wagner here, just about noon in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, January 25th, 2019. And this is the Daily Report for Gold and Silver, our weekend review. And what a way to end the week. What a week we have seen. Gold hits 1,300, comes under pressure, and trades lower. But today, it bounces off of that and through 1,300. Currently, we have gold at $1302.30, up $22.50. That, of course, is basis the February, but we want to look at April because April is truly the most active. $1308.40, up $22.50. Silver up roughly 3% on the day, $15.76. Platinum up almost 2% on the day, $15 gain at $8.20. And then palladium, again, a roaring train, up $41 at $1,322.30. Now, the majority of this, a big part of it, was driven by an extremely weak U.S. dollar. Dollar index down 85 points, now at 95.44. We did have gains in the U.S. equities markets pretty much across the board. Dow Jones Industrial Average gaining 183 points. The NASDAQ Composite gaining 91 points. And the Standard & Poor's, lastly, gaining 22 points at 2664. Traders, what a way to end the week. Of course, we came into this week after watching the market break to the downside from this compression triangle that we identified from a range that began really on January the 4th, and that's this large candle. Of course, this is Friday, Thursday, Wednesday, Tuesday. Monday is when we had the big break. And then for Tuesday, Thursday, and Wednesday, we were fighting these lows in this support level down here at 1275. And my question was whether this level, a shallow correction, would hold before moving higher, or whether there was a possibility of breaking to the next level. And my next level that I would have looked at was 1246, but that obviously is now off the table. This is a tremendous upside surge, $22 plus on the day, and most importantly, it takes us above a very, very critical level of former resistance, which I believe will now become support, and that, of course, is 1,300. Now, traders, I have just released my 2019 forecast looking at both short-term and long-term models, and these charts were done over the last 2 weeks. I do want to show you a chart that does reference this current move here, and I think we'll find it interesting. And realize I did this before we had our major break, but what you'll find interesting is my upside projections. And trader, this is the precise chart that I was speaking about. As you can see, when this chart was created, we didn't yet have that upside spike. We were looking at Monday, Tuesday, Wednesday, and this actually was done just yesterday before we had the major move. And what I was trying to ascertain was that there were two logical places to find a level of support. The current level, which was our current support level, which sits at around 75. And I believe that if it did trade lower than that, we would see it trade to about 1246. Now that we've actually got in play that upside spike, I will tell you what I think we're going to see over the next couple of weeks. Because what we want to look at this point are these upper level projections. That would be these in blue right here. And in essence, what they are based upon is I am looking at the relationship between a wave 1 and a wave 5. If wave 1 is equal to wave 5, that would take prices as high as 1338. You can see that right here. However, I believe that we could see an acceleration in terms of this wave 5, and it could go easily as high as 1.23% of the wave 1, which would take the market to 1352. So although we did not get in the market today, I am looking to put a position on early next week. I'm hoping we'll get some kind of dip, and my target is between 1338 and 1352. And traders, what I am much more excited about then the short-term forecast is my long-term forecast. Because as you will see when you read the full article, and I have a link on the screen where you can go and actually read that, we are predicting that we are in a final major fifth wave of a super cycle. And in fact, we can go back to 1973 to actually see when that super cycle begins, this being a shorter component of that. And in essence, what we are doing here is we've got a couple of different calculations. The calculations on the right-hand side are a projection based upon our move in wave 3. And so if wave 5 is 0.618% of wave 3, it would take gold pricing up to 1,874. And if wave 5 is a 0.78% projection of wave 3, it will take us up to 2,094. These numbers here on the side are very, very close. And what they are looking at is a 1-to-1 relationship here between wave 1 and wave 5, and this is a 1.23% retracement of wave 1 and wave 5. This is a multi-year projection. I'm not looking for this to happen overnight. I think that the cycle we're looking at is actually a multi-decade cycle. And to kind of put that in perspective, let me pull up another chart to really give you an indication of what we're looking at. And traders, in terms of a long multi-decade cycle, what I'm looking at is a chart that really begins in 1975, and realize that in 1973, Richard Nixon abandoned the gold standard completely, and that is really the causation of much of what we're seeing now, but specifically this first spike up, this wave 1, then we had a long and protracted correction, and from there, we went into this tremendous wave 3. Now, this wave 3 is really waves 1, 2, and 3 if we look at the shorter one behind it, which is why we get this 5 just below it. So it is, in terms of a fractal quality, these are fitting together like Russian dolls. Of course, we had this defined correction, and if you notice on this correction, it comes in as the beginning of wave 4, and also see, once again, the shorter term, which begins at 2001, and the longer term, which begins in 1975, all correlate. Now, our prediction based on this chart is if wave number 5 is 0.618% of wave 3, then we would see the market go to about 2,084. So both projections using two different time cycles are coming up with the same numbers between 1,800 and 2,000 as a major move in the market. And traders, I think that that's what we're going to see over the next couple of years. Traders, I am extremely excited about the action that we saw today in the market, taking it above a level that needed to be taken out, and that, of course, is the high achieved back in January 4th. 1,300 was the number in the Feb contract. Of course, we are looking at our April contract. The February contract has already had a golden cross between the 50 and 200 day. I would expect that to happen early next week. But if we're correct on our short-term forecast, we could be looking for gold to go to about 1,360. And if we are correct about our long-term forecast, and again, traders, I'm looking at this over the next couple of years, but we will see gold take out its former all-time record high at $1,900 per ounce and get a new one at $2,000 for a single ounce of gold. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you next week for another daily update and review. And traders, the fireworks, I believe, have just begun.